as we advance, we get faster and faster. We're now in a world where speed is so quick. Things spread on Twitter so quickly. These were all games, buy big money, keeping it and kind of getting people to be on the wrong side before reversing. Now that's just part of it, but that is a recipe for disaster. Yeah, so emotion is part of trading, but it needs to be taken away from trading to be level-headed and do the right thing. So, for instance, the biggest thing to control emotion is position size. All right, if someone comes to me and says, hey, I want to invest X amount of dollars in a stock or a cryptocurrency, I'm going to say, okay, to you, if you invest that and this stock or crypto goes 10% against you, are you going to get emotional? If the answer is yes, then it's too much. It's too big of a position. So make sure that when people invest, you have to invest the proper amount, that if I were to strap you with a heart rate monitor and you were in that trade, if it goes against you, your heart rate should not budge 1 inch. It should not change at all. And that will tell you that it's the right position size. You need to essentially be robotic. The beautiful thing about trading is that as you learn and you discipline yourself, you don't really have periods where you go up and then back down significantly. It's much more of a slow incline and it just keeps going and going. So as you do better, your account grows and then you can trade more money. You're more confident. You understand your discipline is there. So you do invest more money and the profits get bigger and bigger along the way. So the bottom line is when it comes to trading, you have to first realize that you're not trading stocks, companies, cryptocurrencies. You're trading human emotion, right? So it doesn't matter what chart it is. The technicals will work for it. It could be oil. It could be gold. It could be silver. It could be Bitcoin, or it could be Apple stock. The bottom line is people buy because they are greedy. They think price is going up, and they sell because they're fearful. They think price has gotten too high and they want to get out of the position. So all charts are equal. My methodology, the bottom line is it comes to key points within the charts. So you're looking for these things called bottoming tails and topping tails. You're drawing trend lines. Essentially, you're looking to generally go counter trend. Most people will tell you that that's the scary thing to do, and they'd be right. If you don't know what you're doing, counter trend trading, meaning if stock is falling dramatically, it's very dangerous to pick it up. A chart where this is the chart of Bitcoin, and it's probably the most famous call that I ever made when we were at near 69,000. I said, guys, don't trust this. Everyone else was extremely bullish on Bitcoin, saying it was going to be 100,000 by the end of November, and then 200, 500,000 after. I looked at the chart and I saw multiple signals telling me that it was going to be a reversal and most likely a cycle tops. There's something in the methodology I discovered, and again, this is something I actually created. It's called the confirmation signal. The confirmation signal tells you that when something gets above a previous high, meaning people think it's a breakout, you need to see 2 consecutive higher closes for it to actually be considered a breakout. The reason is because algorithms and institutions will play games. They'll push something above a previous high, ultimately to reverse it, knowing that a lot of people will get stopped out on their shorts when it goes above that high, and then also people will go long when it breaks that high. So it's a way of getting most people on the wrong side of the trade, and institutions do this nonstop with stocks, cryptocurrencies, and etc. These were all games, buy big money, keeping it and kind of getting people to be on the wrong side before reversing. Now that's just part of it. Number 2, you had an RSI negative divergence out there that was massive going on here from this high to this high. You had a higher high, but the RSI was actually declining from those 2 periods. You also had sentiment indicators going on where you had mass euphoria of double top kind of nature, that if you study psychology and you study human nature, it was telling you that this was the end of a run, not the beginning of a bigger breakout. What I'm a believer in is that we are part, as people, as humans, we are part of something bigger on this planet, and we are affected by things like nature is. And so therefore, things that replicate in nature will most likely have an impact on us, and therefore whether or not we're a buyer or seller. A head and shoulders chart that we had on the Bitcoin chart back in 2021, and it was an absolute perfect thing. And I'm going to show this right now to you guys to get you a sense, all right? So right here is your neckline, and I want to show you here. Let me click on this and we'll bring up the trend lines, all right? So shoulder here, then up here to your head. This is your head across here. And there's your other shoulder forming right there. Now, this is what's so freaking exciting about this, is that now you have your head and shoulders. And what I did, and I think I actually had talked to Kitco back in 2021 and called this out. And I said, guys, the price target of this head and shoulder pattern is a 30,000 handle on it. Look at this. It's identical. So basically what I'm telling you now is that when a head and shoulder, so first of all, this is a head and shoulder, but it doesn't matter until it breaks the neckline, which is right here. Once it breaks the neckline, you can then calculate the exact target of where this should fall. And in this case with Bitcoin, literally it was within 50 bucks of the target of Bitcoin, and it went right there before bouncing back. I actually did a trade on this and it worked out beautifully. Never believe anyone if they tell you they don't have losses, all right? So it's about minimizing the loss, controlling the loss, and ultimately getting out. So, you know, I've never come across someone that if they're not dedicated, they can't do this. It's not like you need a certain IQ. I certainly don't have a super high IQ. I'm sure it's very average overall. So if I can do it, anyone can do it. In fact, when I was a beginning trader, I lost and made mistakes many times, more so than I probably should have. In other words, it took me a lot longer to learn from my mistakes. Yeah, so fundamental analysis means relatively little to me, and I'll tell you why, is that when you get into fundamental analysis, there's, in bull markets, PE ratios get way extended. In bear markets, they retract immensely, right? They get very low. So the question is, well, what's the real value here? And it all comes down to investor sentiment. And so if investor sentiment is bullish, if the Fed's printing money, guess what? Valuations are going to go up more than they should. If investor sentiment is negative, if people are fearful, it's going to get driven down. So I think it's something we have to continue to keep an eye on in terms of the AI and the advancements in technology. But there's been algorithms out there for the last 20 years or 15 or 10 years. And honestly, I haven't noticed any sort of difference in trading technically. The levels still work, the technicals all formulate. And again, it's all about that probability, right? So if I ever notice that some sort of pattern is no longer accessible, let's say I try it once, twice, 3 times, and it fails over and over again, all of a sudden as a trader, I need to adapt and say, okay, now let me adapt to this. It's not working. Let me step back and go to something else and kind of keep an eye on it. But if it's not working anymore, the best traders, the ones that will be most profitable, will adapt quickest. And that's so important. So this is going back to 1929. And this is the Great Depression low. And look at this trend line, how it cuts right through all of these lows. And this is where we currently are. And what I take by this is saying that this trend line, which started back even before computers, even before most technologies, I mean, you just were beginning to get cars out there, this is a trend line that still holds true. And I can use this trend line that if it comes back, if price comes back to this level, which it inevitably will, showing the history of this, I can buy that trend line. And I think this is important too, is that the algorithms, if you know them, they are likely going to be buying the same levels as me. In fact, they can actually work as a kind of a wind behind your back. So if you can pinpoint the levels that the AI and that the algorithms will also buy, you just got to get in first before the algorithms, and they'll actually do the work for you and take you to the profit. You have to go into the trades with a careful eye. You have to go in not thinking that you're a genius, that you found the next big thing. Instead, go in slowly, kind of dip your toe in the water, and that's a way to mitigate and be able to trade around your positions. And then always, as always, you have to understand going in, if this trade does go against me, there are 2 times you get out. Number 1 is if your thesis fails. The other thing would be is if it ever hits a max level where your comfort zone says, okay, I need to get out of this trade because it's hit X amount of dollars loss. All right, people that stay in, they're going to get more and more emotional if it's too much, if it's too big of a loss. And that, again, is a no-no for investors. One of the most common is following people on Twitter, following the herd. That is so dangerous. Again, once you're seeing everyone pumping it on Twitter, you can almost guarantee that most of the money is in already. Sure, occasionally you'll make money. You're playing musical chairs at that point where you just hope you get out before everyone else gets out. But that is a recipe for disaster. What you need to do is you need to go to your drawing board. You need to find the plays that make sense based on technical factors. But again, that is a huge one. Yeah, I think that's a must do. You must do that. Again, this is part of a healthy portfolio. It's a part of risk assessment and risk diversification. So again, you know, having a core position in gold or a core position in something else is always a good idea. Something that you think based on your technical thesis will have longevity and will consistently grind higher. You have to diversify. And by the way, that doesn't just go for stocks or with crypto or with anything else. You can diversify with real estate, you can diversify with gold, you can diversify stocks, oil. There's so many ways to diversify in this day and age, and crypto as we talked about, that again, really, that's the portfolio you want. Because what you'll find is that sometimes the positions that you think are going to do well don't do well, but then you might have invested in gold and maybe that's your big leader. You don't know. So I personally don't think so. I think that, again, the charts are the charts. In fact, I've been able to use them to make a lot of great calls in crypto. So I do believe it still works perfectly for cryptocurrencies. As we advance, we get faster and faster. We're now in a world where speed is so quick. Things spread on Twitter so quickly. Look at the banks that have failed, how quickly deposits were pulled out because of social media and the word spreading. So I think that's the key, is everything is speeding up. But at the same time, what that does, and this is amazing for the technicals, is that creates more fear and emotion, more greed and fear, because it spreads faster. And therefore, that gives us, as technical, level-headed, kind of disciplined traders, believe it or not, it gives us more advantage. It gives us more opportunities to take advantage of these kind of mispriced situations. I've been humbled by the market and almost gone broke so many times in my early career that even when I buy a house or even when I buy a car, I like to pay off that note ASAP as fast as possible when I have the money, because I remember the feeling of losing everything. And I just, in my head, I'm saying, well, there's anything could happen tomorrow. Life is not a given, right? We have to live for today, but at the same time, we have to save for tomorrow. And you might be in a scenario where something could change tomorrow. And I don't want to have these bills hanging over my head. So pay it off, get it done, and just live as if that next trade could go against you. Always be cautious in the markets. Technical trading can be very taxing mentally. It's a lot of looking at the computer screens, lots of looking at candlesticks, and you need that downtime away from the charts. So I think for the most part, the advice I would give everyone out there is, number one, stay humble. Number two, always assume you could be wrong. That's just generally in life something that we should all keep in mind. And number three is that if you study hard enough, you really dedicate yourself, I'm a true believer that each and every person out there that's watching this, they can succeed in anything they put their mind to.